If we can just start with you and your take on the day today. We did see gains. We finished off the highs just up 0.2%. Now the volumes were high today, and that's what really sets this session apart from the other positive sessions we've seen in the past couple of months or so. But I believe a lot of that was down to Goodman Group.
Lots of investors will be popping open their champagne bottles today. It's been a good year so far for the Australian share market, and today we saw the high of 2012. Not only that, it was on quite strong volumes. All this week we've struggled to break that $3.5 billion barrier, but today we saw $4.5 billion being traded, which signals that there is some strength in this move upwards. If we have a look at the market for 2012, the Australian share market's up by 13%, and that doesn't include the dividends of about 4.4% for the market at the moment. Of course, it has been those defensive areas which have really led the gains this year. The healthcare space having an amazing run, up by 46%, the telecom sector up by 30%, the property space up by 25%, and it's been the energy and the material stocks which have been left behind. We have a look at energy down by 1.5% for the year, and the material space down by 2.7%. So we've reversed a lot of those losses that we saw in the materials and the energy space just a couple of months ago. And in fact, if this run continues for the miners, then it does look like we may see all sectors of the market finishing in the black for the year. Today we saw the material space doing well. We saw iron ore prices up quite strongly for the third consecutive session, up by 1.2% overnight, and that really helped the iron ore place. But once again, it was healthcare which were the star performers. We saw CSL up 2.6% to a new all-time record high today. In fact, the stock's up by 70% in 2012 so far. We also saw other sectors doing well, but on the flip side, we saw some of those defensive areas being left behind. The telecom sector, the property space, financial stocks, all finishing in the red. We also saw some stocks reaching 52-week highs, and this is quite broad-based. We saw Breville Group doing well, we saw Perpetual, as well as Insurance Australia Group, all breaking past 52-week highs. So all in all, a great day for the Australian share market, seeing a new 52-week high. We have a look at the intraday graph, though. This is what it looks like. It would have been nice to have ended on the highs of the session rather than near the lows. But for the time being, we've broken that high, and if we can maintain and build on this gain in the next coming session, that bodes well for the Aussie share market.
BHP as well today, which was interesting that it's divesting this Browse asset, and a lot of people have been saying this is a vote of no confidence in the project, but Woodside shares are up, and I've been reading some analyst comments that this is actually a net positive for Woodside. Can you just give us the implications for both parties there?
So we're seeing BHP selling out of the Browse LNG project, and if we have a look at the implications for BHP, it's not a big deal for BHP Billiton. It's not a core asset, it's not a strategic asset either. However, the read-through for Woodside Petroleum is extremely positive in terms of the valuation for the Browse project. So that's a positive for Woodside Petroleum, and we've seen the shares rallying on the back of that BHP announcement. We have a look at the Browse Basin project, though. It is coming up to challenges on two fronts. First of all, the technical challenges on whether it's going to be an onshore or an offshore processing facility associated with the Browse project. And secondly, the environmental factors. There's a lot of environmental concerns around this project as well. Not only that, we've seen some key partners selling out of stakes this year, and that, I guess, is a reflection of both the price and the uncertainty around this project. We've seen Chevron selling out of its stake to Shell for a cash sum, as well as a swap of assets. We've also seen now BHP selling out of its stake to PetroChina, and of course Woodside Petroleum selling out of some of its stake to Mimi or the Mitsui and Mitsubishi earlier on in the year. So altogether, Woodside Petroleum still holds about 33.1%. There is some uncertainty associated with this project. In fact, the final investment decision is due in the first half of 2013. But of course, with all these factors in play, the probability of this project coming to a final investment decision, which is a positive in the first half of the year, has certainly decreased. We know a lot of these LNG projects are facing cost blowouts at the moment, and with the high prices that the different partners have managed to sell the stakes at this year, I guess it was an attractive option for BHP at the moment to get out of a higher risk project.
Weighing in on this one as well, in terms of the retail sentiment out there, we seem to be witnessing more fear than is showing up in that index. Would you agree with that?
I think we are seeing some better investor sentiment coming through, and part of that is decreasing interest rates that we're seeing here domestically, which makes equities a more attractive investment. And also around the globe, we're still seeing quantitative easing. We're going to see the Japanese elections this weekend. We'll probably see the LPT party winning, and of course more in terms of that asset buying program that Japan has been on for the last few years, and an increase in that program. So a dilution in terms of the Japanese yen. And then over in the US tonight, we're watching for comments coming through from the Federal Reserve, the FOMC meeting, and it looks like the market really speculating that we're going to see Operation Twist being replaced by outright Treasury purchases. And of course, that would mean more quantitative easing and a positive implication for some of the risk assets. So things looking pretty good for the Aussie share market. It is also dividend paying season, so we're expecting to see some of that money that's being paid out by those blue chip companies to investors to make its way back into the market. But the low volatility makes it a very difficult environment for traders. So I guess traders having a hard time with the low volatility that has been around for a while now. But for investors, it's shaped up to be a pretty good 2012. It looks like the market bottomed back in June, and we've seen an increase of 13% for the Aussie share market.